All right, in today's video, I want to take a look at where my predictions for 22, how those turned out, and what I think is probably in play for 23. So at the beginning of the year, I told all my subscribers I think it's going to be a difficult year to make any sustainable gains. The main goal for the year is not to lose a lot of money. At some point, we're going to get multi-year cycle lows in commodities and stocks, and that'll be the time to swing for the fences, so to speak. But 2022 was a year to not lose money, and so let's go through several markets here. You can see in stocks that's exactly what's happened here. We've had just an incredibly choppy bear market with violent counter-trend rallies. These are typical of bear markets to get everybody. If you're short and you get caught in one of these rallies, if you hang onto your shorts a little too long, then you end up giving back all your gains. And then at the top, you become convinced that the bottom is in, and that's when you want to get long. And then, of course, you get another leg down. And so a really, really difficult market to make any sustainable gains. You can make a little bit on a trade, and then you lose a little bit on the next trade, and back and forth, erratic, whipsawing, hard to come away with the year with any sustainable gains, and that played out or was illustrated perfectly in the challenge. Out of the, I think, 40-some contestants, only 5 people were even able to produce a positive portfolio this year. And the best, the number one finisher was only able to produce a modest gain that in any other year wouldn't even have gotten him into the top 5. It wouldn't even have gotten him even close to the top 5. So that tells you what a difficult year this has been, and exactly as I predicted it was going to be. Unfortunately, a lot of people I guess they didn't believe me, or they thought maybe that they were going to be able to, or they would be the one that would be able to outsmart the market. And so I think a lot of people tried to force leveraged trades into a market like this, and they ended up probably losing a lot of money. So instead of following my advice and just making sure that they didn't take any big losses, just try and get some base hits here and there, you get people that are trying to get home runs. And in an environment like we had last year, a home run is a death strategy. You're going to lose lots and lots of money. So in stocks here, you can see it's been a very destructive year as of Friday's close. The S&P anyway was down about 19%. The NASDAQ has been down more, or is down more. But the path to get there has been very erratic, very hard to make any gains. So the correct strategy, of course, would be to sell short. The problem is you just can't hang on to shorts during these counter-trend rallies. You're just going to you end up selling at the top of the rallies, and you lose all your gains. So really a very difficult market to make any money, period, and especially to come away with any gains at the end of the year. So that's the stock market, and I suspect my prediction for 23 is it's probably not going to change. The 4-year cycle low isn't due until like the spring of 24, and even if we were to get a slightly short cycle, that's probably not going to be due until the spring of 23. So I don't expect anything to get any easier in stocks. So if you're trading stocks aggressively, or you're trading with leverage, you're probably just going to produce the same result you did in 22, and you're going to lose a lot of money. So that's what I'm looking at for stocks. Not a great year to be investing at all in the stock market. The dollar, this is where we ended the year. these horizontal lines are where we ended last year, so you get some idea whether the market is positive or negative. So the dollar was a very good place to be for most of the year until we get this top in September, and then you end up like giving back a big chunk of your gain. So kind of a difficult market in stocks too. If you didn't pick this top correctly, you gave back a huge chunk of your gains over the last couple of months. And because it is getting late in this 3-year cycle, I suspect that the dollar, people that have kind of gotten used to this trending phase that started back here at the beginning of the 3-year cycle, have gotten used to this upward trending phase, are probably now due for disappointment. I think the dollar's probably entered a cyclical bear market that will give us a bottom. It's not due until the spring of 24. So I suspect the chart of the dollar is going to kind of start to look like that chart of the S&P, where you get these counter-trend rallies that get everybody bullish, and they think, oh, this trend is coming back, and then the fundamentals take over, it rolls over, and it starts another leg down. So, and I don't even know so much that it's fundamentals. I'm not even sure how much fundamentals there are in the currency markets. But let's say sentiment takes over, and regression takes over, and the market continues down until it finally forms that 3-year cycle low. Again, as I said, is due in maybe the spring or summer of 24. So let me just real quickly, I'll switch this to the weekly chart, and I'll show you kind of the big problem with the dollar. All right, so here's the problem. This was basically, this is like a parabolic bubble in the dollar, and it's collapsing. The parabolic move is starting to collapse. So fundamental, you can cite all the fundamentals you want, but I think this is what's driving the dollar now is sentiment. Just way too many people got way too bullish, and they're continuing to stay bullish as the parabolic move starts to collapse, and that's the fuel to just keep this going. So the dollar, I think, is being driven by sentiment and by a regression back to this 200-week moving average. So I think this is just probably going to be a really difficult market for the next year and a half or so. Something that looks very similar to what happened in the stock market. So basically, your opportunity was from this final 3-year cycle low here, and then this double bottom here. This was your opportunity, and it was one heck of an opportunity. But you had to recognize the bubble-ish pattern that had developed, and you needed to control greed and just get off of that train, because it was always destined to crash. And that's what's happening. And again, like I said, people are now perma bulls on the dollar, just like they were and continue to be perma bulls on Bitcoin, even though that bubble has clearly burst. So in the dollar, I don't think that's going to be a good place to be for the next year and a half. I think it's going to be a very difficult market. All right, so unlike stocks and sort of, well, positive at least, like the dollar, oil was true to my prediction as well, a very difficult market. Now, it had been a very easy market for 2 years, all the way into this kind of a parabolic blow-off top. Not necessarily parabolic, but a blow-off top pretty clearly as the war in Ukraine got started. We had this crazy vertical move, and then sentiment got too extreme, and commodities in general started the move down into the 3-year cycle low. Now the question is have we completed that 3-year cycle low? And there are some pros and cons that we may have completed that 3-year cycle low in the commodity complex. And if not, then it would be a slightly early 3-year cycle low. Granted, the normal timing band would be in the spring of 23, and that might still happen, because I do believe we probably got another leg down in the stock market, and that may drag the commodity markets down with it. So there's some pros to maybe this being the 3-year cycle low in the commodity complex, and then some cons that suggest that maybe it's still out here going to form out here in March. Too early for me to say which way is going to play out, but I do think that I don't think that it's going to get easier in stocks. I definitely think it's going to get easier in commodities, because either way, if this was a 3-year cycle low, then it's already starting to get easier. If that's going to come in March, then the easy phase will come after March. So either way, I think commodities is where you want to be in 23, and I think you're going to get an easy phase where you can make sustainable money in commodities. So while I don't think stocks are going to be the place to be in 2023, commodities are going to be the place to be. So some slightly positive here in metals, but exactly as I predicted, very difficult market to make any sustainable gains. All right, moving on to just the commodity complex, the CRB, a much better look than oil in general. The commodity complex has, again, it has been difficult after June. It's been working its way down into that 3-year cycle low. And again, like I said, I'm not sure if this was the final 3-year cycle low. If it was, it came quite early. So that makes me a little suspicious that the commodity complex may have one more leg down in the spring. But definitely a much better look than the stock market here, and even a better look than just oil in general. So my prediction again is that at some point next year, commodities are going to be the place to be, and that may already be happening. It is a small chance anyway that maybe this was a final 3-year cycle low in the commodity complex. But I think 2023 is going to be the year of commodities. You want to be in commodities. All right, gold, no different than any of the other markets. Beginning of the year, very nice trending phase, but this was a blow-off phase into a multi-year cycle top, and gold has been beyond difficult since then, as it works its way down into an 8-year cycle low. So the pros look more convincing, to me anyway, that gold may have formed its 8-year cycle low. And usually gold will bottom a few months ahead of the CRB. So if the CRB forms a 3-year, when the CRB forms a 3-year cycle low, gold will very often will form its 8-year cycle low slightly ahead of that. So that's one of the reasons why I think the odds are better in favor that this is a final 8-year cycle low in gold than maybe the odds of the CRB forming its 3-year cycle low a little early. So most definitely, I think gold and precious metals are absolutely where you want to have some, maybe as much as a third or even 50% of your portfolio next year. I think we're going to get an easy phase where you can make sustainable money. I think this 8-year cycle is going to be the phase where we get our parabolic bubble top in the metals. Once we get a breakout above this, let's just call it 2100. Once we get a breakout above 2100, it's going to be game on. And over the next year and a half from any breakout above this, I think that's where we get our bubble phase. It's going to take gold anywhere from $5,000 to $10,000. So I think gold is absolutely a place to be. The way commodity markets, bull markets unfold is generally what leads the first part of the commodity bull, doesn't lead the second, and something else will take the lead. So obviously energy was the leader coming out of that multi-year bear market bottom in the spring of 2020. Oil was the leading sector. Now I think in the second leg of the commodity bull market, I think gold is going to take that leadership role. Precious metals. Silver, also positive for the year, but also an incredibly difficult market. Silver has been one of the more heavily manipulated markets, and I think that is one of the reasons why it is leading the precious metals. It's leading gold, leading the miners. It's because it was so heavily suppressed and manipulated, and it looks to me like that manipulation is breaking or has broken, and now silver is leading. And if you're going to have a significant part of your portfolio in metals, I think you want to have a big chunk of that in silver. Silver is going to massively outperform gold during a bubble phase. The unique characteristic about silver, though, is it tends to produce that massive outperformance right at the very end, as everybody kind of catches on that the metals are doing something special, and then gold is priced too much, so the average person jumps into silver, which is much cheaper. The unusual characteristic, though, right now is that silver is moving very aggressively, and it's doing so very early in what appears to me to be a new multi-year cycle advance. So pay attention here. Silver is leading. It is leading aggressively, and I think that is the red flag waving that you want to be in silver for the next year and a half. And then finally, to finish up, the mining stocks have been suppressed and manipulated at least as much, if not more, than silver. Here was where we ended the year here. So you can see the miners are down for the year, but they've got a lot of catching up to do. So while I would say you probably want to have most of your metals invested in silver, I think you should definitely have some capital invested in the miners too, as they should play catch up during this advancing phase of a new 8-year cycle. And again, I think the odds are pretty good that gold did form its 8-year cycle low. Don't think we would get this rounded bottoming pattern if this was a bear market rally that was going to have to come down and make another lower low. So in my opinion, next year is going to be the year of precious metals. It's going to be the year of commodities, not going to be the year of stocks, probably not going to be the year of the dollar either. So that's where I'm going to focus subscribers to the SMT. I'm going to try and keep them focused generally in the commodity markets, more or less away from stocks. And not that I really like to trade commodities, but I don't think I would be interested in trading the dollar from the long side for the next year and a half, as it's just getting too late in that 3-year cycle. And we've probably started the move down into the 3-year cycle low in the dollar, and it sure looks like the dollar formed at least a semi-bubble based on how far it stretched above that 200-week moving average, and it sure looks to me like that semi-bubble is in collapse. And then I guess finally we can take a look at Bitcoin. So, what more can you say? This is a busted bubble. I tried to warn people here that it was a bubble here. We got our warning shot, and then I told people, usually you get some kind of a retest or a double top. That's what we got, and then the bubble has popped, and people are still in denial in Bitcoin. They continue to assume that it's going to make a comeback any day now, and that's the fuel that just keeps the bubble going further and further down. And I suspect that we have probably years to go before this reaches a final bottom. We got to get rid of all these people that are still on board with the the Bitcoin is coming back. It's the place to be, to hide from central banks, and that sentiment is still there. That's what happens when a bubble bursts. Usually takes many years for that sentiment to get washed out. So I suspect before Bitcoin is done, it's probably going below 5,000, maybe below 2,000. So not a good place to be, other than just counter trend rallies. I don't think I think we're years away from getting any kind of sustainable move in Bitcoin. So not where I would be next year either.